Hi everyone. Today is Tuesday, April the 9th, and all the folks that said terrible things that were going to happen about solar eclipse, well, they're having to wait a lot longer for whatever doomsday event that they are after. As I mentioned, the only thing that I thought would happen is that volumes would go down a little because people were outside watching. So, that being said, let's take a look at what's going on with SPY. Take a look at this 520 number. Listen, 2 days breaking higher lows. Could today be the day? It could be. Listen, when you have a series of higher lows and the jam up here becomes heavy, eventually traders will try to break this line. And if it breaks and there's a lot of traders sitting here on the edge, we're going to scream to this next level. Okay, so that's what I want you to be careful about. The top edge here, everything else is the same. No numbers have changed. It is still by the dip. We had a little bit of a doji yesterday. We're coming back up over this 8 EMA here, holding the edge. Here's my thought. Buy the dip. It gets to here. Take half the profit. It starts moving down again. Take the other half. Okay? That's my supposition, how I want to trade the SPY environment right here. Nothing else going on, just raw price discovery in this area. Okay? Let's take a look at the Qs. I know some of you guys hate that I don't do this in order. I should do that in order. I just like to mix things up. It's whatever I'm feeling. So bear with me. Qs, same sort of thing. Higher lows, right? Higher closes for sure over the last couple of days. Same problem here. If it gets to that 443, it starts jamming up, they'll punch. Now, the key note is this, both for the SPY and the Qs, this bounce up here is going to collapse. It is not going to hold and break out. The big picture is all the big positions are laid out on the table. Soft landing, hard landing, and whatever else is in between. The lines are drawn in the sand. Now everybody's waiting for the shoes to drop. Earnings season starting again. We've got FOMC minutes released tomorrow. All kinds of things. So people are in a wait state to see what happens. Now there are a lot of latecomers to the party who are still really buying the dip. And there are a lot of people who've been trying to short this market for, 100 Q points, right? And so maybe they're getting tired. We get one more blow off top and then things move ahead. But my thought is we are hitting the grind zone, right? It's going to be like a millstone that's going to wear you out if you keep thinking it's going to break to the north or break to the south. My suspicion is that it's not until the levee breaks, and we'll be able to see that very, very widely. I don't really see anything like that getting ready to happen. I mean, of course, we've got things to be concerned about, but not, So buy the dip. When it gets here, take half the gains, and if it breaks out, you leave it on, move your stop right to where the price action is actually right now, about 442, and then you let it climb up to the top, and you take profit there. This is not a buy and hold environment. It simply is not. All right, let's look at the IWM. Everybody's talking about small caps. Tomorrow we might do something in the small caps. We just have to see. We're holding 200 really, really well. But again, they're caught in the same thing. Here they are up at the top. This looks to me like they're going to break to the north. I'm going to look at the TLT next to see what's going on. But this looks like a break. So what we've got is price action that, again, by the dip, punches us up to that 206-ish, 207-ish area where we end up grinding once more. Notice how this rounding event at the top of the edge gives us this pattern of mean reversion. And take a look. Trend is still up. Trend is still up. And so we've got to take that into account. All right, let's get to the futures. My bread and butter. Taking a look here. What are they doing? Same thing SPY's doing, trying to get to the top there. If you're saying to yourself, listen, I just heard what you said about SPY. It's already moving up. How can I buy the dip? Well, everybody in the pre-market is long coming into the space. So when they come into the open of the US day, they are going to either, one, pile on more longs, or 2, take some profit. Well, what have they been doing? They've been taking profit at the resistance. We expect them to do it again. Expect that in the SPY. The dip that comes into the higher low, maybe 52, 54-ish, something like that. Whatever the SPY happens to be in that space here, you look for heavy congestion, and then you take the long relative to risk and walk it up the band, right? My thought is going to be, I would normally take a short up here. I've done that for the past 2 days, and it's been okay to me. I've had a couple of places that, my trades didn't go very well, but in general, very, very well. Today, I'm not going to do that. Another higher low tells me I still need to buy the dip and trade in the direction of trend for as long as it holds. We've got a line up here at 52.90 and then 53.08. Let's take a look at the Qs. I know we're steering down the daily, but I'm telling you, if you use the daily levels to trade intraday, you're going to find yourself in so much better positioning that you're going to love it. All right, take a look. Yesterday, low, broke just under that 18,252 and then held. What happened? It popped up and then collapsed, closed right on this ledge. Is this line important? Maybe, maybe not. Maybe it's lower. This is why I don't like trading to trend lines, because you can move them and have an infinite number of connections. All right. Price action, however, is the key space. And this still tells us, hey, I've got some trouble at 18,400. I still suspect sellers move in there, but I'm not going to take the short there. I'm going to wait for it to fade, perhaps all the way down into 18,321 for the ideal pressure point. And that is where I'm going to go, right, for that long action and see that it potentially gives me what I want. All right, let's take a look at the YM. Also in a buy the dip formation, a little less strong because what we're having is price compression here. But what this tells us is there is a break on the horizon and it's going to be strong. The longer we stay compressed in a region, the bigger the moves out of the compression, okay? And so here's price compression. Again, the past couple of days, I've been selling the bounce. Not going to be selling the bounce today. Okay, I'm going to rephrase that. Unless I'm doing a scalp trade, I'm not going to be selling the bounce. I'm going to be waiting for the dip, and I'm going to buy that dip on my tighter action formations, send me up into resistance, I'm going to take half the gains, and I'm going to let it walk up the band into the prior areas of resistance. Everything feels like traders want to buy, okay? Got a CPI report tomorrow, so I don't think people are going to be sitting in front of a big number, but they are going to trade the ranges. Take a look at this. This one, the RTY, is looking like it wants to break to the north. It does. Looks like it wants to break to the north. And so where's it going to break? 2103. And then we've got this wick. But notice, every single wick has been sold. Now, we have higher lows and, last couple of days, higher highs. So this is definitely not a place you want to sell unless you're moving a scalp. And then that way, you can run it long into the 2110 area. And that ought to be good. You know what? I am not loving the size of that line. It's much, much, much better. I like it smaller. Okay. That's it for that. Let's take a look at oil. Now, it's been a while. If you are a new... Whoa. Now, here's my thing about oil. I believe that oil is in a topping formation, right? So, last week it's the high. And so far, we've come into resistance off of that edge, 87. We know these numbers are sort of like 30, 70 kind of things, right? So I'm going to put that at the 50-ish area so that we're careful about this. Listen, I suspect that this is geopolitical, but unless this starts coming in, people who are looking for interest rates to fade, they are going to be up a creek without a paddle, because that is not what this data is telling them. It's not what it's saying at all. And so the question mark will be, how do we hold across this area? This is a bullish formation. It is still by the dip, but I believe we are in a mean reversion, and that's what we are seeing from a daily perspective. We have not made a high in 2 days. That's Friday. This was Monday, yesterday, and notice, pure buy the dip action. Absolutely pure buy the dip action. I am going to remove the alert here, and I'm going to remove the ray, and I'm going to remove this line, and I'm going to move it down here. I'm going to give us a new line, because this obviously is where the ideal buy points might be in this space. Take a look. Rotating over, what are they going to do? They're going to try and buy the dip, folks. This formation tells us they're going to try and buy the dip. Remember from my old videos, how do you figure out what a chart is going to do? Look at the candle in motion and look at 3 candles to the left. Really, ideally 2. 3 gives you a much bigger range, but you can see the 2 candles to the left give you the potential range of the candle in motion. What the traders are trying to do, they're trying to hold the open of yesterday. And if they're trying to hold the open of yesterday, that makes 86 a potential bounce zone for a first pass trade with a very tight stop. And if it cannot hold that edge, it's going to walk down these patterns, 85.38, 84.71, and so on and so forth. Be careful here. We are in reversion to the mean, but it is still clearly buy the dip environment. Lastly, let's take a look at gold. Man, I've been yammering a while. Whoa, still running. Okay, so the Fibonacci we drew yesterday right here, right? Was it here? Yes, 23.34. Right here, we've got a continuation to the north. Again, when gold starts moving like this is a big commodities run. Everybody you're talking about says, hey, commodities, commodities, commodities. We're in a commodities bull cycle, and people have been talking about the advent of this bull cycle for a while. Here's the problem. If the inputs, a la commodities, get more expensive, the outputs will get more expensive, and inflation is not going away. So what we have is something that is saying, listen, the currencies are getting weaker relative to the dollar. Relative to gold. If everything gets priced according to what this gold action is doing, it is telling us that there is currency weakening across the board. It is a complete Gordian knot, but my suspicion is still traders are going to try and take some profit into the next bounce. And so all the gold bugs just doing really, really well. I would say, time to feed the ducks, pull in a little bit of the profit, and then look for the next space on the horizon. And you know what? We're gonna be doing that. Okay, folks, that's it for me. Good luck trading today. Manage your risk. It's the first and most important thing that will keep you in a long and lucrative career. All right, take it easy, and I'll see you on the platforms.